Elon Musk just dropped a new prediction for what the valuation could be like for Tesla 10 years from now, and it's kind of crazy. But first, let's go over the data that will be coming out tomorrow morning and how that could affect our market. So first up, tomorrow morning at 8:30 in the morning Eastern Standard Time, we are going to get core PC price index month over month. You're expecting 0.1%. Last month was 0.2%. I do believe with expectations this low, you could be set up for a slightly hotter report. Maybe. We've seen this in the past. When expectations are low, we usually don't meet them, at least not to the degree in which, expectations are already low, right? Whereas when expectations are high for CPI or PCE or PPI, whatever inflation metric you are looking at, you do have a greater chance of actually beating that. Now, it's possible you could come in at a low 0.1 or 0%. That's always a possibility. And to be quite honest, I don't know what's going to happen. All I'm saying is anytime we've had really low expectations in the past, we have been disappointed from recent memory. So I do think that is a risk heading into tomorrow. We do have personal income month over month that is expected at 0.4%. Last month you were at 0.3%, so that would be a little bit of a rise in personal incomes. Not enough to be, causing wage price spiral concerns or anything along those lines. You're just really catching up to the price increases that we've already seen in wages. Now, personal spending month over month is expected to be 0.3%. Last month, it was 0.2%. So 0.3% coming off of a 0.2% positive month over month is a very strong number. So if we get a strong number like that, that will fuel or help justify some of the high earnings expectations that we have for the S&P 500 this year and heading into earnings season. Considering over 73% of economic activity of GDP is comprised of people spending money, that data can actually be very important tomorrow. You need to see people spending money. If people start to slow down, that's not great. What we actually seen today was durable goods orders came in really bad. That was because last month you were revised from 0.7% down to 0.2%. And then this month, for the month of May, you came in at 0.1%. So we actually came in line with the estimates. But when you consider last month's revision, it was a really bad number or not as good as what we were expecting. So that's kind of concerning what we had today. And I think that is fueling a little bit of those growth fears that did cause 10-year treasury yields to fall about 2.5 basis points today. And I do think tomorrow's data will have a big impact on 10-year treasuries as well. Now, tomorrow morning at 9:45 in the morning, we will get the Chicago PMI. We are expecting a number around 42. Last month was 35.4. So higher the better here. Really, the better economic activity that we see, just overall, the better off that we will be as far as the markets. Because right now, people are a little concerned about growth and about the economy. So if we can start to put those fears to the side, then I think you will see a broadening out of our markets and you will start to see more participation. But if growth fears continue, then it's going to be continued crowding into AI, into other big tech names, in which Tesla really doesn't get grouped in that category as of yet. Now, we will get final numbers for Michigan consumer sentiment, 5-year inflation expectations, Michigan consumer expectations, current conditions, and 1-year inflation expectations. Now, Fed Bowman will speak tomorrow around noon. She also spoke again today and basically said the same thing that she said 2 days ago. The Fed would be willing to raise rates again if they needed to, which is not very comforting to markets. Fed Bostic, on the other hand, said some things that were very positive for markets. He said, quote, I want to be absolutely certain inflation will return to 2% before an initial cut that should be seen as the first in a series. That is the reason for patience. But he did say that inflation is moving in the right direction and expect the first interest rate cut in Q4 of this year. Now, as per the data that we had today, this is a new record low for US pending home sales. So nothing is happening in the real estate market, and that should start to have an impact on prices. in the not so distant future, and that will hopefully cause housing inflation to fall. Beware, the probability of a recession assigned by the yield curve is 63% by the end of this year. This level has only been seen 3 times since 1960, and all 3 ended in severe recessions: 1974, 1980, and 1981. Game of Trade says this time is not different. Check this out from Pantheon Research. They say inflation is expected to slow and lead to aggressive Fed easing. It says the Fed is likely to cut interest rates by 25 basis points in September, followed up with twice as big cuts in November and December. So 50 basis points in November, 50 basis points in December, in a much more aggressive easing than 1 or 2 cuts markets expect and officials project for 2024. Pantheon economists say in a note, they argue that upcoming data will show that the Q1 acceleration was an anomaly and the disinflation trend remains ingrained. As a result, Pantheon forecasts a strong rally in treasuries, driving the 10-year yield down to about 3.25% by the end of this year. That would be the lowest since late 2022. Today, the 10-year treasury yield is 4.286%, which is actually interesting because this week you have seen massive inflows to TLT, the ETF that tracks the 20-year treasury that we call out all of the time here on this channel. In fact, the inflow to TLT was a record. You've never seen another inflow like this ever before, and that was a $2.7 billion inflow on Monday. Again, the largest one-day inflow in history. So that means people are really starting to put their money where their mouth is and expecting 10-year treasury yields, or really the entire yield curve, could start to fall quite a bit. That either happens 2 ways. Either the economy weakens, forcing the Fed to cut rates, or inflation falls more than expected and causing the Fed to cut rates. One of which leads to a good outcome for markets, one of which leads to a bad outcome for markets. And clearly, the economy weakening is the bad outcome and inflation falling is the good outcome. Elon Musk is back on X today with a pretty bombshell prediction for Tesla's valuation in a relatively short amount of time. Alex here on X says the year is 2034. Tesla operates close to 100 million robotaxis and over 1 billion Optimus robots, while Tesla is still a $24 trillion stock. Elon Musk says that is probably an accurate prediction. And if I'm doing the math correctly on that would be over a 40x of Tesla's stock price, let alone buybacks or let alone dividends that will probably come by that time. Peter Burskin on X says, and I should mention, he is the chief global strategist and director of research at BCares Search, formerly with Goldman Sachs and the IMF, International Monetary Fund. He says, I hope this is a data error, but LinkUp's estimate of job openings posted by America's top 10,000 companies is crashing, like literally going straight down. Relative to cap-weighted S&P 500, the equal-weighted S&P 500 is on track for its worst first 6 months of the year in the history of the index. So you are really seeing the S&P 500 well outperforming the S&P 500 equal weight, which is usually not a great sign. Either you get a catch up or a catch down from here. And I'm not expecting much of anything is going to happen until we get a reason for a move, until we get some really good or really bad data, until we get a more impactful shift from the Fed, till the labor market weakens further or something happens. I'm not expecting much for stocks. Essentially, we need a catalyst. And during this low volume summer market, I don't know when that's going to happen, but you're not going to move that much on this low volume for no reason, especially not with big tech being so overextended the way we are. And really fully valued. If you take a look at the RSI on the S&P, the RSI on the S&P is still overbought at 71, which is pretty interesting. If we take a look at the triple Qs, the RSI is about 69. So in fact, the S&P's RSI is more overbought than the NASDAQ, which is kind of crazy in and of itself. Today, the big story is on Nike earnings, and that will tell us a lot about the discretionary spending of the consumer. As I mentioned in the last video, sentiment for Tesla over on StockTwits is still pretty good, not as good as yesterday's 71, which was bullish, almost extremely bullish. Today's sentiment is 59, which is still bullish. Message volume is the same as yesterday at 60, so people still showing a lot of interest in Tesla, and participation ratio today at 54. Now, clearly it's not going to be as bullish as numbers as what we seen yesterday, because Tesla stock was up 5%. And I do think overall Tesla stock wants to break out here. Tesla's short interest has recently started to explode as well, sitting at 3.82% short interest of free float, and almost $21 billion currently sold short in the stock, with 106 million shares that are currently short. I mean, today you're even seeing 3.65 million shares on net that are being sold short. This can help fuel a lot of upside for Tesla, especially if Tesla gives us good news, maybe a better than expected delivery number, July 2nd. It's going to catch a lot of people off sides, and a lot of people are going to lose a lot of money quickly. Wouldn't surprise me if Tesla stock can break well into the 200s on any kind of mild short squeeze like event. If we take a look at the option activity, the final numbers for the day today, you have 14 different unusual and interesting trades from hedge funds and institutions, totaling $4.75 million with a positive order value of 67%. For the downside, you want to watch that 188 level. For the upside, you want to watch that $200 level. It's possible we just trade sideways here until July 2nd. Don't be surprised though if maybe tomorrow or on Monday before that July 2nd number comes out, Tesla stock trades down a little bit, as there could be some fear heading into that number itself. Tesla's RSI is sitting at 65.5, so looking pretty strong, and Tesla's MACD is really starting to ramp up. MACD line at 4.21, signal line at 2.5. So let me know what you think about this information down below in the comments section. Hit the like button as well as subscribe to the channel if you have not done so already. Most importantly, enjoy the rest of your day, and I will see you in the next one.